Ben ritrovati, siamo ancora sul floor del New York Stock Exchange, una giornata di ribassi dopo una lunga sequenza di guadagni. Ne parliamo con il mio ospite qui sul floor che è Mark Otto, Designated Market Maker per Knight Capital Americas. Mark, thank you so much for being with us.
Thanks for having me back.
So Mark, after a long sequence of gains, today we are back down. What is the market looking at today?
Well, you have to remember it's always healthy to have some pullbacks. You can't just have the market just raise up to the heavens. It seems as though there's two driving forces in today's sell-off. Predominantly, it's coming out of China. People are speculating what growth looks like for China. Speculation has been whether China is in for a hard or a soft landing. It seems as though hard landing is off the table. Definitely a soft landing to whatever degree that may be. It seems as though iron ore demand from China has slowed, so the metals sold off last night. Hong Kong, Shanghai exchanges were both down over 1%. Japan was closed last night, but it definitely swung in through this morning, and you saw that China's demand for automobiles out of Europe were down as well. So obviously China is a major export trade partner with the Eurozone and the EU in itself. So that's definitely had a weight on the FTSE, CAC, and DAC are all down over 1% right now.
And you're looking at Europe, in particular you're looking at Italy today.
Yes, so it's actually nice to be talking about something other than Greece. So I'm sorry I said that, but it seems as though Mario Monti has an uphill battle with the unions. It seems as though now that the situation in Greece has quieted down for now, at least, that the focus may shift to what's going on in Italy, what's going on in Spain. Spain has 23% unemployment. Labor unions are a big obstacle as far as reforms. They don't want to surrender the power. We've talked about this in the past. Yeah.
And also, in the case of Italy, we have to remind people that it happened, I mean, they tried already 10 years ago, and of course all the Italians that are watching, they know that the same reform has been approached 10 years ago, but now I guess there is more urgency to find an agreement.
Absolutely. I mean, Greek sort of set a precedence in itself, but I think that the ECB, IMF are trying to be more aggressive and draw more conclusions quicker so that things don't start inflaming. So.
Now, going back to the market, well, of course, we were talking about the market, but let's talk about more technical levels. A lot of people were expecting a correction had really never arrived. Do you think that with today's movement, we can expect a couple of more days down?
Well, it's interesting because we actually tested two levels. I came in today and my levels were 1397 and 1403. We've actually been trading right between them. So we tested 1397. We weren't able to break through. On the downside, if we actually got through that, I'm looking at 1392 and 1387. But really, today's range so far has been 1397 to 1403. It'll be interesting when the European markets close to see what the rest of the afternoon looks like after that. Because right now I've been tracking those Eurozone financials and they're all down. Financials are spotty, but mostly lower here. And tech sector is actually had some over pullbacks. There's a feeling that people are taking profits and taking risk off the table.
Yeah, they were the two stronger sector in the last couple of days, and more than that. Now we are we have only a little bit over a week left to the end of the quarter. A lot of expectations are kind of like scary about how the season is going to be. So it's going to be very crucial to understand how the companies did in the last quarter to see if the rally can be sustained.
Yes, I definitely believe there is that bit of fear. You don't actually see it dramatically in the VIX right now, which is the barometer for the fear. I would anticipate if the people thought the market was going to sell off more, you'd see more of a spike in the VIX. I think one continuing factor going forward is people are going to keep a close eye on oil. Right now, it seems as though Saudi Arabia has actually helped to dampen the fear of what's going on in Iran. I think they're putting out about 143,000 barrels a day more as of January, and Syria is actually pumping more oil as well. So that's easing that. However, if tensions continue to ignite and the situation in Iran escalates, definitely oil can have an impact on certainly quarterly profits.
And this week, lastly, we are looking at some economic data. Mainly, it's going to be about the housing sector. This morning, we saw the first data coming. What do you expect, and how really, how much is the market looking at those numbers? We need other sectors to recuperate first, right?
Yes, I think housing at this point it seems to be a lagging indicator. It seems as though people are more concerned with people getting into jobs, so everyone's keeping a close eye on the jobless claims and consumer spending, which is 2/3 of our economy. So the thought process is you want people to get into jobs, start spending money, and then buying houses. So it definitely seems to be a lagging indicator, and we had some housing data yesterday as well as today, and it didn't really seem to sway the market yet.
So we'll see this week.
Absolutely.
Thank you, Mark Otto, for being with us.
Thank you. All right, great.